All right, hi everybody. It's Joe Bladdick here. I'm a mortgage broker in Ontario, and today I have Andrew Chefs. I'm going to start that again here. All right, let's start this again here. It's Joe Bladdick here, I'm a mortgage broker in Ontario, and I wanted to introduce today Andrew Sheftsov. He's a real estate agent right in the GTA in Toronto there, and he actually was. I'm going to tell you a bit of Andrew's background here, so you get to know him a little bit. He was born in Moscow in Russia, so he was born there. Speaks Russian and English very well. He moved to Toronto, and not before he actually lived in the States for 10 years. He actually lived down south in Florida for about 10 years. And then he's been in Canada now in Toronto for about 18 years. So he comes with a lot of experience of different areas, different neighborhoods, and been in North America now for 28 years. He has one son. He's about 18 months, and he's married. And yeah, he's been in real estate now for a few years. He's got about 7 to 8 years combined experience there, helping clients and business and real estate there. So welcome to our video.
Awesome. Thank
Andrew.
you, Joy. It's a pleasure being here. I appreciate your time.
Hello?
Yep, I'm still here.
Oh, you are. We'll start some of the questions here today. We'll have some of the fears when they're home. I'm sure you see it all the time. Okay.
Yeah, the little saying at the bottom said poor connection or bad connection under your picture. So I don't know if that means my connection to you or it's your connection to the internet. I've never used this blab thing before. This is actually pretty neat.
Hey everybody, it's Joe Bladdick here. We're here today with Andrew Sheftsov. He's a real estate agent down in Toronto, Ontario. He specializes in all kinds of actually real estate, land, houses, condominiums, high-end homes. Let me tell you a little bit about Andrew. He was originally born in Moscow in Russia. He speaks fluent Russian and English. He's been in Toronto for about 18 years. Prior to that, he was in Florida, down in the United States. So he knows a lot about different markets and neighborhoods. He's got an 18-month-old son, and is married. So comes with about 7 to 8 years combined experience. He's got a lot of experience in real estate, customer service, as well as all different kinds of business. So I'm a mortgage broker myself, and we're just here to talk about some of the fears when people have buying a home. welcome to the video, Andrew.
Oh, thank you, Joe. I appreciate your time. It's nice to be here.
Thank you very much for coming. So I guess let's start this off. A lot of people have fears buying a home. I'm sure you see it all the time. Am I right?
Oh, absolutely. It's a major move, especially if it's like a family or someone, not like an investor, but someone who's looking to move in a new home, sometimes for the first time. Yeah, it's a huge life change.
Yeah, for sure. So let me ask you a question here. What's one major issue or fear that you see with people looking to buy a home these days?
Well, the current markets, I'm sure, Joe, I know you usually keep up with the markets, the way the interest rates are, and as well as the house prices.
Yeah.
Everyone knows the house prices have been going up for quite a while. The appreciation has been great, to say the least, if you're a homeowner. If you're a home buyer, one of the major fears is that you may have to overpay for a house that you're looking to buy.
Yeah. So when it comes to overpaying for a house, do you find that is it because of multiple offer situation, or do you find that it's just people feel it's too much for the house? Like, what are you finding there?
There are a lot of different reasons. Sometimes it's a kind of an emotional response. You feel that it should be a certain number, and you actually end up paying, or you end up having to pay another number, and you feel, well, that's not what it's worth. Fair market value really plays into it. It's important to keep that in mind. Multiple offers certainly are very popular in Toronto, especially, but I've seen it as far east as Bowmanville and in the Clarington area. I've seen it in Barrie, as I'm sure you have yourself. So that's one major issue of people thinking this way. But Joe, if I may clarify, the actual overpaying, you and I know you know. I want to make sure everybody else knows it doesn't mean that you're overpaying or going over your budget. We would never allow that. You or I would never allow a client to do that. But in terms of overpaying for something that they think, or maybe in a different market, would be a certain price, now you're paying what is called a premium.
Yeah.
5 to 10% on average, usually.
Oh, okay. Yeah. And I see that a lot. Say if the house is located in a really lucrative area, like a school area, the parents want the kid to go to that school, or say it's there's high rental rates there, so maybe an investor would want to pay a premium to earn that higher rental rate on their investment.
Sure.
But yeah, in terms of overpaying, I see sometimes clients put in an offer that's $20,000 over asking, and maybe the clients think that they overpaid in the end. But as a mortgage broker and working with the lenders at interest of that, the mortgage lender or bank will never put a mortgage on a property they think is not worth what the client is buying it for. They do a lot of processes in the back end to make sure the property value is there, is what it is, and sometimes we'll do a in-house at the bank appraisal based on current sales in that neighborhood, or a drive-by appraisal, which the client never really knows about, and that confirms the value there. Or they'll even send out a physical appraiser to evaluate the property. I always see those prices come right in what they're asking for because the market's demanding it. So that's just my sort of take on that. So another question for you. How do you help and encourage a buyer to move past the fear of overpaying while making sure that that they don't do something that isn't in their best interest? How would you do that there?
Well, there's many different ways, especially depending on the person's situation, their financial situation, the reason they're moving, those kinds of things, whether it's a single person or maybe a family. There are two main things that both you and I have spoken about on many different occasions. That there's really two things I try to get them to focus on. So the first, as I mentioned before, it's an emotional response. So you try and get them to kind of calm down and really focus on two specific things. The first very simple thing that I try to clarify is that if you're buying high, say you are buying it at that 5 to 10% premium, and you have to sell very quickly, maybe in the year after or something like that. And their fear is, well, the market's going to go down. I've paid a premium. Now I'm out some certain amount of money. I always remind them when you're buying high, or excuse me, when you're selling low, you're also buying low. The whole market changes kind of accordingly. Now, it's not generalized. Not everything goes down the same percentage. But for the most part, I try to remind them that, when you're down in your price, the house you're going to buy next is going to be in the same situation. So if you're paying a premium now, you're going to actually be saving a premium and you're buying the next property, if that's what you have to do. And that's, of course, only in the chance that they're looking to actually sell quickly afterwards for some emergency case or something like that. I don't know. You probably had some experience with that, Joe, no?
Clients selling because of an emergency situation?
Yeah, having to sell something quickly, and you know, I have to remind them that they're gonna, if they buy, they'll be buying the same kind of environment.
Exactly. Yeah. Clients think, well, they're getting a great price for their house when they're selling it, and they want clients expect to get the world for their house when they sell it, and then when they buy the house, they expect the world of a deal on the other end too. So it doesn't quite work like that. It's usually a fair price on the sale end and a fair price on the buy end. But yeah, market's been going great. I'm seeing double-digit growth in the Barrie area and Toronto area, which has been fantastic. On the mortgage side, though, you're not really ever losing if you buy a house, even though, say, it doesn't grow at all. Say you buy it for $500,000, and then a year from now, it's still only worth $500,000. That's actually not a bad thing. If you're buying that house and you're paying down the mortgage, you're going to reduce that mortgage amount by at least $15,000 over that course of 12 months. With rates being so low, you're actually paying on quite a bit of the mortgage right away, and including your down payment, which say was $50,000 when you bought the house, you've accumulated there $65,000 in equity. So if you do sell, you do have some equity to draw off of to get back, and then you can turn around and buy another property from there.
Absolutely, Joe. That's really the second thing that I try to focus on as well. And you made an absolutely great point, the fact that if there's even no appreciation, you're actually still building equity for yourself. You're putting money, or a huge percentage of the money that you pay monthly for bills and utilities, etc., to your own pocket as equity. One thing I always remember, a good advice financial planners and those kinds of folks always tell, especially new families, is if you can, set aside some money monthly that you can automatically deduct from your checking account or wherever your money goes from work, from your wages, to a savings account. It's money you don't see, you don't really feel it, 25 bucks a month, $50 a month. And the reason for that is it's psychologically very easy to save that way. You have to. It's automatically in there. You just assume that money is not yours for the time being.
That's right.
When you have a mortgage, it's exactly the same thing. You're actually forced to pay bills, including your mortgage.
Yes.
But fortunately, a large percentage of that bill goes towards yourself. So it's kind of like a forced savings plan. So I've actually seen to great benefit, and some of the clients that I've had, because you've been the financing, they actually enjoy this aspect of it, that now they're putting money into their own pocket. And that they'll actually budget better by themselves. They'll say, you know what, I'm going to take away some of these extra expenses that I don't need to do. I'm going to budget this on a monthly basis, all because I want to make sure that I'm able not only to pay my mortgage, but pay it in such a way that I am paying maximum and putting maximum amount of money in my pocket. It's psychologically speaking, it's very encouraging. And again, like you said, down the line, so much equity you've been building, you can actually put a down payment on a bigger house, more of a house of your dreams versus something that maybe you're kind of working towards now.
Yeah, those are some excellent points there, Andrew. Thanks so much. And thanks so much for talking about some of the fears that home buyers have today when they're buying a house. I mean, you really covered it off. It seems like, there are fears. However, either way you put it, if you go and you buy a house today, you're not really going to lose. You're going to pay that.
Absolutely.
Yeah, you're going to get that market appreciation eventually. If not, we're going to get that mortgage paid down. People are always building equity. And is there anything else you want to add before we tie it up here? Perhaps you could give us some contact details. How can people get a hold of you if they want to start looking for a home today?
Oh, absolutely. In fact, a lot of people are. I'm seeing a very busy January already, and we're only 2 weeks into it. I'm sure you're probably seeing something similar. Again, my name is Andrew Shevtsov. I'm Century 21. On my website, probably the easiest way to contact me would be through my website at askandrew.realtor. That's askandrew.realtor, and I have my contact information there. I have some links to different questions people have, and there's actually a place there where you can just ask me any question you want, and I'll get back to you more than likely within 24 hours. As the site says. Of course, my cell number, 416-873-2275. I have that with me most of the time, and certainly leave a voicemail. I'm happy to respond. I'm happy to answer questions, even if you're not maybe exactly thinking of buying or selling, but maybe it's an idea. Absolutely. I'll be happy to answer questions and help in which way I can. And yeah, listen, Joe, thanks for the opportunity. I appreciate you having me.
No problem, Andrew. I'm sure if the viewers here today want to connect with you, they can look at this video again and always connect with you to start looking for a home. Thanks for being on the show, and we're going to sign off now.
Awesome. Thanks, Joe.
No problem.